going to be, and that will then shape where Bitcoin goes. And my guess is the Fed is going to have to raise rates multiple times more, which will then push Bitcoin down to the final flush out. Yeah, I don't know how I ever even thought I would make money before I got into technicals. Just understanding how charts work and how they represent human emotion, and how you, by reading a chart properly, you're really reading the emotion of investors in the marketplace as a whole. Looking at double bottoms, bottoming tails, bull flags. I mean, you name it. There's so many signals, and really looking at these things gives you the ability to put the probabilities in your favor. By no means am I a perfect trader. I have plenty of losses, as we all do, honestly, but to have that probability be 70-80% success rate, that's where you start letting the numbers kind of take care of themselves. And I always love saying, like, you want to be the casino, right? You don't want to be the gambler who the odds are against. You want to be the casino where, they may lose to a gambler here and there, but if 1,000 people walk in that door, they're always making money. I still remember I was in Dubai at a blockchain conference, and this was last October, and Bitcoin was like just around 65,000. And I basically said, I don't believe this is a breakout. I don't think this is happening. I think it's going to head to 20,000. You should have heard the social media uproar over it. I was the devil. I was totally stupid. I was everything, right? But ultimately, the charts are telling me these things, and I just know how to read them relatively well. And sure enough, since then, we've come down. I think just a couple nights ago, we tested 25,000. So we haven't quite got to the target yet. But the bottom line is it's going to go there. For those of you that I know, a lot of you guys are stock traders. If you're an older stock trader and you traded through the .com bubble, this is .com 2.0, right? It's the hype. People in the .com era, it was all about, this technology is going to change the world. The internet's changing the world. And they were right. The problem is, things just don't go linearly like that. So it wasn't like, oh, you're just going to go up in the .coms forever. So there had to be a washout there. They say the same thing about blockchain technology, Bitcoin. I agree with them long term. It is game changing, but you still can't have all these crap coins out there. And so you need to see a flush out. And I always remind people that in the .com era, Amazon was around. It was $112 stock. It went to $6 in the washout. So what is that? 90% down, over 90%. And now it went from $6 in 2000-ish all the way up to a high a year ago of like 3,800. So think about that potential return. You just have to go through this washout. It's very Darwinian like that, where the strongest will survive, and that's healthy for the market. So that was just the beginning of like E-Trade. And I still remember like buying a stock on E-Trade was like $30 to buy, and like 30, or it was like something crazy like that. Now with stock trading, most people are trading for nearly zero. Robinhood is zero. Obviously they're selling out the orders, but nonetheless, it's incredible the difference. But you still had this fledgling internet at that time where you had like chat rooms where people would go, like Yahoo message boards and stuff. And so it was probably on a much more minor scale, but it still just had this impact of everyone kind of hearing about the .coms and calling their brokers, and it was nuts, man. But yeah, it's almost this is the thing about markets, right? Is that we're humans and we're buyers and sellers, and what rules us, right? It's greed and fear. So whether it was greed in the .coms or greed now with crypto, it's the same thing. It's just a different market with different technology, but ultimately the collapses are all going to be led by fear, and a wipeout the same. The NFT bubble was a standard kind of extension of the crypto bubble that we've seen. And you're already seeing it starting to collapse. Like, I mean, the one thing that keeps me away from buying and selling NFTs is that it's such an illiquid market that you could buy in fact, I think there was a story where the person that bought Jack Dorsey's first Twitter tweet as an NFT, he like bought it, I don't know, like $1 million. And then he was trying to sell it, and he couldn't sell it. He couldn't find a buyer for it, even for like $100,000 or even like $50,000. So, I mean, there's no doubt that these things are bubbles. And I think it's just that it's got to be washed out. And I do hope that, I think there is a place for, I mean, if you're someone like me that's concerned about the government printing like endless amounts of money and diluting, you do want something like Bitcoin as the digital gold, where it's kind of like a safety place to go, but it's just not at that point yet. This market is way too young, way too volatile. But I hope it does get there eventually. I was probably one of the only people out there talking bearishly on Bitcoin at those highs. And a part of it was, you start to recognize, even as a stock trader, when people get overly like, and this happened with GameStop and AMC as well, where when the crowds get so kind of enamored and so overhyped for it, that, you know, I've seen so many of these bubbles burst, and just, this is the exact replay of what's going on. And then, so number one, you get kind of that sentiment indicator, which is way too much like hype and way too much craziness on this. And once people start throwing out crazy targets, like, oh, Bitcoin will be at 1 million by year end, you know, you just start to say, all right, this is way too out of control. And then you go to the chart and you're saying, okay, well, let me look at it just from a purely technical standpoint. And you start to realize that the hype is more than when Bitcoin was at 65,000 in March of 2021, and now we're in October, November, and the price is basically at what we would refer to as a double top. So so now, you know, as a technician, double tops are powerful resistance points. You start to watch really closely, and what I could see is every time we would take out that 65,000 by like a day, we would close above it, sellers would come back in and pound it back down. And you say to yourself, okay, well, if all the small investors, if the whole world is bullish, then why isn't it breaking out? And then you start to realize, all right, well, there must be big money unloading it here, right? At the Amazon chart in the .com era, and the chart is exactly identical to Bitcoin's chart right now, which tells me there's more downside on Bitcoin, that it's not done yet. So yeah, it's just so weird to, you know, you kind of mirror the .coms. Some other cool stuff too. There was the Super Bowl in 2000, and there were so many .com commercials, it was dubbed the .com Super Bowl. Well, this latest Super Bowl had a bunch of crypto commercials, right? So like, there's so many similarities, you know, that you just have to say, okay, the chart from Amazon looks identical, this is going on. And so to me, it's just like, all right, it's telling us, it's just a matter of, do we want to believe it in the crypto markets? And a lot of people don't. They're still in denial, but price is truth, as you know. Yeah, I mean, really right now, Ethereum is, no doubt about that. Solana is definitely kind of second tier, but I mean, it's an amazing one. The speed at which, I mean, it's had a lot of problems, but, you know, for me, it's like, you know, you have to be really careful with something like Solana. You know, when I'm diversifying in my crypto portfolio, I'll put the most money into Bitcoin in my portfolio because it's the most stable. It's the one that's most accepted by big money, essentially. These second tier ones like Solana, Avalanche, and other ones, they have a great technology, but you don't know if there'll be another coin that emerges that has better technology. And that's always my kind of fear with these ones that have use case. So Bitcoin really has no use case except for a store of safety. I actually like that. A lot of people kind of say, oh, that's not good, but it's not trying to be anything else. It's just the store of safety. It's the digital gold. That's fine. The other ones are all competing for, you know, speed, you know, which one's faster in terms of transactions, which one's cheaper. And that's where you kind of can get into some situations. So it's not to not invest in them a little bit, but just understand that you need to diversify amongst a greater number because you don't know which one will be the ultimate winner. I'm definitely more the type where, for shorter term trading, I'm just like, all right, well, what's the level? Like if I'm going to do a day trade or a quick swing trade, it's all technicals, right? But when I'm thinking about, okay, well, where am I going to position some of my wealth? Is it going to be in gold? Is it going to be in crypto? Is it going to, you know, where am I going to spread it out? Then that's where you have to, I mean, you can't keep your head in the sand and not see longer term trends emerging that maybe aren't showing up in the charts just yet. I'm definitely no expert when it comes to this stuff, but from what I know is that, you know, basically you have these stable coins that are pegged to currencies, in other words, the dollar. So they're supposed to make transactions much easier than going through dollars, where people can kind of get in and get out of assets in Tether, for instance. Now, with the Terra Luna situation, Terra Luna had a stable coin, UST, which basically was algorithmically pegged. And my guess is, and again, I don't think we have any proof of this yet, but this happens in the stock market, so I'm sure it happens here. I'm sure funds figured out, well, if we can break this algorithm, if we throw this much money at this side of the market on the stable coin. And that's exactly what they did. They broke it. It probably spent a few $1 million to break it and then made $20 million on the other side. So it obviously, the math makes sense. But this is the problem, is that, you know, these stable coins are supposed to be stable. And once you have them collapsing, it really shakes the confidence in all stable coins. So I did see a report that said, even from Tether, which isn't the UST one, that Terra Luna, but it's basically the biggest one, that one has even seen like 7 billion in outflows because people are nervous, and rightly so. And remember, there's no there's no regulation in this sector, right? So it's all these companies are just doing it themselves with, who knows if someone's being shady and doing something, you don't know. There's nothing there. So I think that bottom line is, even though, regulation is kind of like a bad word in the crypto world, but you need certain types of regulations if crypto is ever going to be adopted as a legitimate form of payments, even just in terms of like, how is your algorithm working to be pegged? Like, is there risks there? And like, you're claiming your algorithm is going to keep this stable coin matched to the dollar, but then, who's to say that the government or there's no regulation that says, okay, that has to be, or this has to be done this way. And so it really leaves any sort of, we know how hackers are, right? With people trying to get into every little ounce of anything. So it leaves that door open where there could be an opening for someone to do something like this. And I think that's exactly what they did. And now the problem is now you've seen other stable coins start to depeg as well. Tether did briefly, and then they got it back to $1, but there's no doubt that other people will try to do the same thing and make a lot of money doing it. So it's amazing because, again, it's all human emotion, right? So we are humans, we have greed, we have fear. And so throughout time, you're going to see these periods where these bubbles are created and then burst. I think for the most part, on cryptocurrencies, the biggest thing is the risk on, risk off factor. So again, you can basically track the Bitcoin chart with the NASDAQ at this point, where when you have a big down day in the NASDAQ, people sell crypto as well, because it's risk off, right? Everyone's trying to protect themselves. And as much as Bitcoin wants to be a digital gold and be a safety area, it's not. You were mentioning how old things are and how new the market in crypto is. And basically, Bitcoin was created in 2009. It's the equivalent of a 13-year-old, right? So I always like to say to people, like how erratic is a 13-year-old? Very erratic, right? Versus a mature adult or grandparent that's very measured. Like gold would be kind of the grandparent, while you have like the 13-year-old is Bitcoin. And so you see how crazy Bitcoin acts, because it just hasn't matured yet as an asset. So I think as a macro, there's lots of positives out there, like El Salvador adopting it, and even Facebook just, I think, a day or two ago started to get involved in Bitcoin a little bit as well. But fear and greed rule everything. And right now you have a fearful market of the Fed hiking. And that's the biggest macro play, is what is the Fed going to do? How hawkish is the Fed going to be? And that will then shape where Bitcoin goes. And my guess is the Fed is going to have to raise rates multiple times more, which will then push Bitcoin down to the final flush out.